All righty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. We may not have Steve today. I'm not sure. He is trying to. I'm going to see if he's. Yeah, it looks like he's here, but I'm not sure if his internet's going to hold up. He is trying his best. I think he's got torrential downpours he's dealing with right now. So, anyway, just letting you guys know we may or may not have Steve today. But I want to get through the charts. We've got a little bit of dollar strength coming through the market, and I was actually just looking at the euro, and we can see that false breakout at the 78% retracement. Excuse me. Looking at the euro, I'm not sure how I want to trade the euro. But, well, actually, I'm not trading the euro. I just hope it goes down because it's gonna help my U.S. dollar Norwegian krona recover and stay well above 870. But the euro dollar, this little hourly false breakout here and the 78% retracement is offering resistance for today. So I'm going to write up today as resistance at being 117.80. And I'm going to keep us in range for now. I want to keep us in range at the moment because if you guys missed it if you guys missed it on the Morning Edge, or I'm sorry, on the FACE webinar, when I was talking about the euro yen, I'm a little worried about the euro, about trading it now because of the euro yen complication. So it'll resolve itself, I'm sure, in the next day or two, where I'll have a better idea of what I want to do with the euro. But at this moment, I'm just not comfortable trading it. I mean, that's it. I mean, that's the bottom line. If I'm not comfortable trading it, I'm not going to trade it. So, and it's fine not being able to have a read on a currency. The euro is one of them for me right now at this time. So, but I think I know where support and resistance is. Let's go ahead and get rid of these. Right. Well, we'll keep that wedge in there for now. Support's going to be down here as it was yesterday. This 117.25. I think that's going to be support in the 117. But right now we have this resistance of 117.80, and then next resistance after that's going to be 118. So and support 117 and 117.25, right? Okay. Now let's go look at the sterling. I was really hoping that the cable might get up to this. I was really hoping for this last night that we were going to reach for this resistance here and the 50% retracement, this downtrend line, previous support. I thought this whole confluence would come into play. I still think that that's going to be significant. I think that is what we need to be paying attention to today. If we can get up to 137.90. And hey, I want to ask you guys a question. How many of you live in the UK right now? How many of you live in the UK? Gavin, you do. Who else lives in the UK that's listening in? You can use the chat box, or yeah, I'm gonna leave it to you guys to answer. Which I'm sure there's more of you than just Gavin. But the reason why I asked this, or I wanted to talk to you about, I wanted to ask you a question, and Gavin, maybe you can help out here. I was talking to Biat yesterday about the situation in the UK, and he was referencing that there's a lot of supply chain issues in the UK, and that has to do more with Brexit and less with global supply chain issues, which I found really interesting in the UK. And so yeah, let me know if you have Alex says my brother lives in London. You know, if you guys know anything about like he was just referencing basically that the UK is experiencing a lot of issues that are more Brexit related, you know, post Brexit related, if you will, not other issues. Anyway, but what he also noticed, and obviously I've noticed this as well, is that the sterling's starting to underperform, and you can really see it in the euro pound, and that's I've been trying to buy the euro pound on dips. I've had orders out just kind of waiting to get triggered, and they're not even coming close. But the sterling's actually starting to trade a little heavier, and I think we've got to note that, especially if we start breaking through some of these support levels. I'm going to say intraday support right now. We're just going to mark up these lows here, which right now comes at 137. Then after that, 136. So I doubt we see 136 today, but you never know. I mean, there's, you know, there's headlines coming. Regional Fed governors, you know, as we discussed, you know, are going to be plaguing the market over the next couple of days, and that's really what's happening right now. Crude oil is under a little bit of pressure, and on your radar. All right, let's go over to the Aussie. So the Aussie is still below 73 cents, still bearish. So this dotted line is really important. As you guys know, I don't need to really oh, that's it. There we go. I think that is more visible. So while we're below there at basically 73 cents, it still remains bearish. That's significant. So remember yesterday, I don't know if you guys recall yesterday when we were talking about the Aussie, during the daily roundup, said, hey, you know, we were here. And I'm like, hey, we might get one last push up to the 618 retracement and then reverse. We went to the 618 retracement. We have reversed thus far, but really we have to get through some of this support before the market's going to, you know, turn bearish again. And so let's, you know, keep an eye on that 72.20 level. Now that we've hit that 618, we've reversed, and, you know, we're respecting resistance now. Kiwi 618's holding, so that's going to be, I'm going to give it all the way to 70 cents because that's right here. Like, you imagine we're here right now. Like, let's just imagine we race up to the, you know, trend line, but just keep in mind that the 618's right here, right? So 70 cents, we should not see above 70 cents right now or today in the Kiwi. And we do have this hourly support here at 69.30. And then below that, 69. So I'll write both of those down. I just keep us in range. Dollar Canadian, you know, I was showing this hourly little triangle here. We really have to get back above this resistance here to get, you know, to get bullish again. I mean, this is, you know, it's obviously been a very big level for the market for so long. Support is below the lows, but it's this trend line right here. So it would be like the exact opposite of the Aussie in a sense. What I mean by that is if we drop through these lows, if we drop through those lows, I'd be more concerned about the trend line holding than these lows holding. So at this point in time, it's 125. It's called 125.75. Okay. Swissy. 92, 91. By the way, I think this is going to be pretty significant support. And that's not significant resistance. Okay. US dollar, Norwegian krona. You know, it's holding above like horizontal support. I actually think bigger support is going to be obviously at 870. I know we've said that about a bazillion times here. But I think we could reach for it. So that's the thing I want to point out. That's oops. 878 is support here. Unfortunately, my pattern in play goes down to 879, but I still think if you're trading on the long side of the US dollar Norwegian krona, you can give it some room, but because I actually think we're just still in this range. Resistance intraday is whatever all these highs are. So 880, let's just call it 886. Continuing on. Dollar Mexican peso. Gavin said, yeah, some shops here have food shortages. Not a lot, but some due to driver shortages, I think. Driver shortages and the, you know, I heard like some of your dairy issues and, you know, it's crazy, right? Amazon here's one of the big problems that, and I'll continue on with the dollar back in just 1 second. Sorry guys, I got home really late last night, and my kids' football matches are super late. Anyway, just starting the season. What was I going to say? Oh, here in the US, we're having a driver issue too. People just don't want to do it, you know, and this has been a societal issue here in the United States for a long time. And it's like why I've always been very much, I don't want to say opposed. I've been very much in the belief that the US is never going to ever, at least not in this point in time, not going to be able to ever establish its manufacturing base. And even though, you know, like presidents for the last, you know, I want to say well, Donald Trump ran on this about bringing back manufacturing, you know, made in the USA, yada, yada, yada. Just it isn't going to happen. We don't have the workforce to support that, because in America, you know, people think they're beyond and way above that. And then that's becoming an issue like for a lot of workers right now. And that's not only just a US issue now, that's a big issue with a lot of societies. And it is even becoming a bigger issue with China. Like, you know, the lower wage workers are like, listen, I'm not a factory worker. I don't want to be a factory worker my whole life. I'm not going to do that. You know, I deserve more than that. Right. So I'm just saying that it's becoming an issue, like drivers, factory workers, you know, it's all the same thing, especially as incomes rise. You know, people are like, they demand more. So it's harder to get those types of jobs filled. Anyway, That's neither here nor there. It has nothing to do with the dollar Mexican peso, but it's everything to do with the peso. Is this 50% support right here at around 2015. And then resistance is going to be 2046. So $20.15, $20.46. Oh, this is still bullish. Sorry. Dollar Canadian is not so right now. And the dollar Mexican peso, I think, is on the brink of, I think it's still bullish because it's actually got this bull flag pattern. So, and we're really, we're really maintaining out of this, out of the range, right? Above the 200-day moving average too, as well. Dollar yen. Okay. So the dollar yen still outside of this triangle. You'll notice I moved up the pattern in play because I think if we break back below 109.90, then I think it's going to end up being a false breakout. So 109.90. I can flip it to bullish for now because we're coming out of the triangle. But really big resistance is this 618 right here. So it's these recent highs at 110, let's call it 110.25. Then beyond that is 110.80. So I'm going to write down both of those numbers. 110.25, 110.80. Okay. Dollar index. I'm not sure if this is correct. I'm going to remove this for now, and I'm going to remove these wedges for this wedge for now. What we are going to just make sure that we're very, very well aware of right now is the false breakout from last week. We closed at the breakout point this week, but what could end up being a false breakout for this week if we can't get above that by tomorrow. Okay. So we're gonna keep that little box there just to keep take note of it, right? So if we take these lows, let's go down to this like trend low here. 38, or no, I'm sorry, that's a 50% retracement, comes in just below these levels. So that's going to come in at 92.75. Well, first and foremost, resistance right here will be 93. Let's just call it 93.50. And then support's 92.75. And it's not great support. It really isn't. I don't like looking at 50% retracements and thinking those are good support levels because they just aren't. But we're going to keep us in range on the dollar index. Okay, for now. S&P, well, what's changed? Nothing. The first level support right here is, we're not, I think we have to just note the fact that this is holding, right? And if we break through 44.80, then that would open the door for the wedge again, which comes in at 44.20. So let's go 44.20, 44.80, right? It's obviously still bullish. Oops, damn it. Okay. Resistance 4,500 and then 45.18. Then after that, it's 45.60. So 4,500, 4,518. Gold and silver and Bitcoin. So silver, 24, 23. Oh, hey, same numbers. Surprised, right? 23, 24.
Wrong area, mate.
Oops. Thank you. Thank you. Hey, you're here. How's
Of course I'm
the
here.
how's the rain? Well, no, I told you got
You
like
know,
really bad rain, so you might get cut out, you know.
yeah, phenomenon just moved away. I mean, I can see the sea
Oh,
again.
oh, that's nice.
Yeah.
Oh. You know, I was telling people in the chat room that so last night, well, we've had this really bad monsoon season, which is good. Means we had a lot of rain here in the desert, but the rain, and I hope that just basically says that we're going to get a lot of snow this winter, which will be good for like, because we get our water from the snow from the Rocky Mountains. They, you know,
I
the snow
actually didn't
caps.
know you get to see any snow there.
Oh yeah, I have snow. I can go an hour and a half north of where I live, and I can be on the ski slopes. So yeah,
Nice.
and you know, pine trees and cabins and all sorts of stuff, right?
Nice.
Oh yeah, it's Arizona is a lot more diverse than people think. People think of Arizona, they think of desert. Anyway, the problem with this year is we got these bad monsoon the last month, a lot of rain, and so the bugs for the last month has been out of control. And I used bug spray last night. I used so much of it because you go outside at night and you just get bit up by mosquitoes, and you know it's really quite brutal. And I put on so much bug spray last night. I came home, took a shower, and I got up this morning. I could still smell myself, and I swear I can still taste it in my mouth. And I don't use bug spray all the time. It's so gross.
Yeah, it is. It is. But you know,
Sometimes you gotta.
sometimes you got to do it because
Yeah. So like last
the
night
alternative is a lot worse.
I mean, we were just sitting there getting eaten alive, like all the parents. I brought the bug spray, and I think I shared it with 30 other parents, and I think we went through the whole bottle of bug spray. I mean, the whole thing. It's wild. 50,500, 43.8. So nothing's changed here. 43,800, 5,500, and we're still bullish. All right. So that's it, guys. You know, do keep in mind that we do have a lot of speeches by regional Fed governors today. Keep an eye on the headlines that are coming across here, like on Live Squawk on your ForexAnalytix feed. Just, you know, watch for all the comments that are coming. And remember, tomorrow's the big kahuna. You know, a lot of people aren't going to move until they hear from Fed Chairman Powell. So that's you know going to be the big mover. But I know a lot of people are taking score right now, so just be aware. And euros at the lows, sterling's at the lows, Aussie's at the lows, dollar's pretty much at the highs, almost across the board. So good luck today. And Steve, did you want to take him for a little bit?
Take them for a spin.
Yeah.
Sure, absolutely, mate.
All right, guys. Have a good one. Oh,
You
wait,
too,
John
mate.
said, wait. I'm sorry. John said thousands of toll truck drivers will walk off the job on Friday as the nation's COVID hit food and fuel supply chain braces for further disruptions in Australia. That's interesting. You know, it's
somebody has to fight back.
Yeah.
You know, I think social media is, at least partly responsible for that, but we definitely live in eras of like, huge polarizations, right? Some people thought it was just, for example, like Trump, anti-Trump or whatever, but if you see every single issue, becomes extremely polarized, right? As it has with COVID. And the problem with that is that, in my opinion, voices, that are like more in the middle have disappeared. Personally, I've vaccinated myself, right? I thought that was the right choice to make. My family has been vaccinated. But on the other hand, I have to tell you that I'm seriously troubled by the fact that we are about to make it illegal to not be vaccinated, and that the measures for
Yeah.
COVID are becoming more and more strict, and in many cases more and more stupid, because some of them are really not helping in anything. They're just creating disruptions and problems, right?
Yeah, that's true. I mean, without making this a political conversation, it's one of those things that I think that you got to seriously look at your freedoms and what could be taken away. And that's the one that I've actually had this issue. Like, look, I was happy the day that that Trump couldn't tweet anymore, and the reason why is because his tweets really wrecked my P&L, like
Several times.
several times. I mean,
Not only yours.
from a purely selfish profit and loss reason, when they took the microphone away from Trump on his Twitter account, I was truly happy about that, but I was also very scared about that.
Indeed.
And yeah, I mean, this is, the president of the United States, and you have a social media company taking away, his ability to, say whatever he's going to say, agree or disagree with what he's saying. And those types of freedoms are slowly disappearing, and it's not, it's, who's in control here at this point, you know what I mean? And so I think it's a recipe for a lot of civil unrest.
Exactly. And many people don't realize that even if you agree with a specific cause, let's say vaccines, I agree with the vaccines. I believe that the risk reward, if we want to talk in trading terms, the risk reward is in favor of somebody getting the vaccine, right? That's why I did it, because that's how I assessed the situation, for me personally. But even if you agree with the cause, it's really scary seeing, taking away freedoms, because next time it might be for a reason you totally disagree with. I mean, no one knows in advance, right?
Right. Exactly. Anyway, all right, big conversation. I'm gonna bow out because I don't want to get too knee deep into this. So, for obvious reasons, guys, we try to keep politics out of our analysis and just keep it at analysis. But every once in a while, sometimes you can't help yourself, right, Steve? I mean, it's just...
Oh yeah, absolutely. And let's be honest, right? Economics is not by accident social science, right? It's very closely tied with politics and with the society in general. So, want it or not, many times, these things intertwine, right?
Yeah, exactly. All right, guys, have a good one.
See you later, mate.
Yeah, see you later. And thank you all for being here. And I will see you on the daily roundup in a few hours. All right, thanks, guys.
Bye-bye, mate.
Bye.
Okay. I'm afraid I'm forced to have the same introduction I had yesterday, meaning, as expected, we haven't seen much really happening in the markets today. I mean, depends on what kind of time frame you're looking at. If you're looking at 15-minute time frames, I assume there's always something happening. But with the time frames I'm looking at, the only thing I see is this type of consolidation that we've had resuming, and it's not a surprise. The whole market is waiting to see what the Fed is going to say. And they say the Fed, yeah, I know it's the Jackson Hole Symposium, but in essence, it's all about what the Powell is going to say. And what the Powell is going to say, being the chairman and basically only decider, because I assume you all know that in the case of the Fed, it's not about democracy, right? Theoretically speaking, if the Fed chairman wants to do something, he doesn't have to agree with the rest of them, right? Not that in this case they usually have disagreements. I mean, in the vast majority of the case, we see the exact opposite. They all at least appear to agree almost with everything, with very, very, very rare exceptions. So it's all about mostly what Powell is going to say, and what Powell is going to say is, in essence, going to photograph the current mood in the Fed, and that's all the market more or less cares about, having to do with the Jackson Hole Symposium, right? So everybody's waiting for Powell. Everybody's waiting for to decipher the Fed's mood and the path going forward. And ahead of that, nobody wants to take any added risk. Liquidity, hour by the hour is going to be draining. So, in my opinion, even if we see something happening, there is a big chance it's going to be some type of a false move. Now, obviously, the situation can tilt in any way. It's not about, I said it yesterday. It's not about turning hawkish or whatever. There is no chance about that. I mean, we still have like amazing inflation. We still have the pedal to the metal having to do with monetary policy and easing. It's all about, now we're talking about if we can at least slow somewhat the pace of buying MBSs and treasuries, right? Because don't forget QE, what is it? It's buying mortgage-backed securities and treasuries, right? So it's all about if at least we're going to slow somewhat the pace of buying those two. And if yes, when, and if when, how much? I assume at some point, yes, they're going to taper. But as I've explained multiple times before, why, in my opinion, that's not even, in essence, tightening, because it's just, it's like throwing gasoline in the fire, right? I mean, the fire is burning hot and you're throwing like tons and tons of gasoline. And at some point, you might decide to throw a little bit less gasoline than you used to. Does this help the fire get extinguished? No, absolutely not. It will just, decrease somewhat the pace with which the fire spreads, nothing else. So, but in any case, that's what the market focuses on at the moment. If we're going to get some tapering, and based on that, they're going to judge if the mood is less or more hawkish. And clearly, if the market determines that the path forward having to do with potential tapering is like faster than it was pricing in, what the obvious response is going to be the dollar strengthening. Logic says equities moving lower, right? And logic says yields moving higher, so bonds moving lower. So that's what the logic says. And the exact opposite in case we get the opposite type of a signal. Now, we talked yesterday about several instruments being at key levels, and unsurprisingly, none of them actually broke out. So in the case of the Euro USD, did not break to the upside in this descending wedge. In the case of the USD yen, we're still consolidating. In the case of the DXY, we're holding this little channel trend line support. In the case of the USD CAD, for example, we're holding the bottom of this ascending channel. I think if we are to break lower, it will have to be post whatever statements we get from Powell, so on and so forth. In the case of gold, gold got rejected in essence the day before yesterday, but more or less confirmed yesterday from this channel line resistance. Now, having said that, that doesn't mean that gold has really rolled over. It just means that we're holding that resistance, and I'm assuming we're going to hold rather near that resistance until we get some kind of a signal. Same with silver. I've been saying, I saw that Blake uses the same levels, and surprisingly, 23, 24. This range of $1 is what's going to determine where to next. Above 24 higher, below 23 lower. As simple as that. Now, One of the few things, actually, not the only, because there are a couple of things that are moving today. Cryptocurrencies are moving today, although not extremely substantially, in consideration of the usual increased volatility. The other thing is crude oil. Crude oil was actually more than 1% lower in the day. It has now pared back a little bit some of its losses. Also, probably we're going to get a better idea of what's happening here if we have already found a low, which is a decent possibility, or not, post Powell. And having to do with cryptocurrencies I was talking about, the Bitcoin is almost 4% negative on the day. We talked about that it was a bad idea chasing Bitcoin up here, and it was extremely likely for Bitcoin to pull back to at least the breakout area at 42,500 before it, you can even look at it as a buying opportunity, right? And in the case of Ethereum, the equivalent level was ideally a move back towards 2,500, but 2,900 is definitely the first area of support. So 2,900 and then 2,500 before this can be seen as a buying opportunity. Otherwise, it would be chasing something that has moved fast and very high. Basically, not a very good idea to be doing so. So as you see, it's not that I'm adding any real big value since yesterday, simply because I cannot make things up when the market is not moving, right? I mean, my job is not to be an entertainer; it's just to, objectively tell you what's happening. Now, within that context, I have to say that something interesting is the fact that Palladium is being rejected from 2,500. We had talked about the significance of this resistance area just as we were beginning trying to rebound higher. As long as we trade below 2,500, I think you can safely be in the short side. Above 2,500, then I would be going back to neutral until we ended up seeing a break above the channel. So below 2,500 being short makes sense. Let me think if there was anything else. Yeah, having to do with indices. Obviously, my focus is always going to be on the S&P. Just something here which I added yesterday on my chart. Besides the obvious long-term ascending wedge that we have on this chart depicted in red, right? The one that starts back in the beginning of November of 2020 and is ongoing as we speak. I think it's rather interesting that we have a smaller wedge within the bigger wedge. Support is the same. Resistance, though, is the one you see here in the blue trend line, right? So based on the smaller wedge, we're currently on resistance. So that is something to note. Now, I'm not claiming the significance of this is, as big as the other wedges, which is, a longer term wedge, but it is something to note, right? We are currently testing resistance from this smaller wedge here. We break above there, then we open the door for a move even a little bit north from 4,600. Alternatively, we get rejected from here. We remain contained within the smaller wedge, and clearly there is no reason for anybody to be bearish as long as the trend line support is holding. And in my opinion, having to do with risk assets, you should be taking your cue off the S&P because A, it's the broader index. B, it's the one that's more watched internationally as well, right? So keep that in mind. Now, having to do with the VIX still remains contained within the symmetrical triangle you see here. RSI divergence is obvious, right? In the sense, divergence. I meant between the VIX and the index is obvious because the index has kept posting higher highs while the VIX has started producing higher lows. But as I've explained before, and as we've seen several times in the past, that isn't a timely signal, right? It means something and eventually it plays out, but it's not a timely signal. So you need to keep that in mind. The boundaries are currently, rather clear, with support being roughly at 15.5 and resistance being currently roughly at 2270. I'm assuming we're going to stay within this at least until tomorrow, at the very least until tomorrow, and depends on what happens tomorrow. We talk about it later. That's it, more or less. So I'll be more than happy to answer a few questions before we call it a day. Anyone? Anything? FSLY. Let's see what we get here. Okay, last time we talked about it, I showed, you see, we had this beautiful diamond formation top, and then the sequence of bearish moves followed by consolidations, bearish move, consolidation, another bearish move in currently developing. We had this interesting reversal post earnings, but it failed after filling the gap, and we're now back testing that. Basically, yeah, some divergences seem to be in play here, and we might need to push higher from where we currently are. But in general, this does not look like a healthy instrument, right? I mean, in general, the trend is clearly lower here, despite the short-term picture looking somewhat more attractive after finding, this type of the low there and having this type of a small corrective. Let me fix this. There we go. There we go. Right? There we go. So this is a very likely scenario here, in my opinion. So I would be very skeptical being long this, and if I was long this, I would be very, very careful with my stop loss, and I would be very easy to bail out from here because I don't trust this to the upside. I think it's more likely that it's going to continue moving lower sooner rather than later. Thoughts on XXX JVY crosses if yields continue to rise? I don't remember if it was you, Alan, that asked about them yesterday, because the way the question was written was very similar with the one I answered yesterday. Sorry, my memory is really bad at retaining this type of information. But what I showed yesterday in the several yen pairs is that the vast majority of them, if not all of them, look to me like the pullback we've been having is corrective in form. You did miss yesterday. So yesterday somebody asked about the yen pairs, and I went over all of the major ones, right? Like 5, 6 of them, showing that the vast majority of them, here is Euro yen, here is pound yen, here is Aussie yen, and Kiwi yen, just showing you Kiwi yen, it's even cleaner, so on and so forth. We showed CAD yen. The vast majority of them look to me like they've been in corrective pullbacks. So yields moving higher should produce what I more or less expect, looking at the technicals here, to happen, should produce in the vast majority of them. And since you mentioned yields, it's a good opportunity for me to talk about them, because ahead of Powell, in essence ahead of the Fed, with the Jackson Hole Symposium online now event being a few hours away. There we go. I need to remind you that I kept believing that this move lower is corrective in yields, right? And I do think that yields are nicely positioned for a breakout tomorrow. Now, I can't assume, I don't know what's going to happen, right? I can't assume that because it looks good and they look good, well positioned, that's going to be the outcome is going to be such that that's what's going to happen. But I do think that eventually, sooner rather than later, yields are going to break higher, and tomorrow might be a great opportunity for that to happen. And yes, I do believe that once this happens, I do think that we're going to see higher yen crosses, right? There you go. Hi, Steve. Am I correct if I say any major event overrule any data announcement? Depends on the situation, depends on the juncture of time. There are periods of time that for various reasons, data prints are more important than events or statements, and there are periods of time that the opposite is the case. I think that we're currently in one of these periods that announcements and leading market expectations is more important than actual data that comes out from the market, right? Because the market is clearly now focused on the monetary policy path forward and how this is going to be shaped within the next few weeks, months. So the whole market is waiting for a cue from that direction. Oh, yeah, Jane asked actually about the yen pairs. She says, okay. Zim, Laura is asking for Zims, SZIM. Let's see. Let's have a look at this. Okay, we had this. We satisfied the minimum expectation of a new high. There it was. Then we broke down in what was clearly a corrective move in the way it unfolded. We never broke down from this area of support and of course this area of support, right? Yeah, now clearly this is a more important area of support now that we retested it once again. And we're currently trading, we did produce a new high yesterday. The question is where to from here. So let's see. Obviously, there's no reason not to be bullish, with current developments in play. 54.30 is the next upside target, 60 after that, and very, very, very crude and basic technical analysis. No reason to be bearish as long as we trade above this. RSI does not produce a divergence yet. So yeah, I think remaining bullish here is the only thing that technically speaking makes sense looking at this chart at the moment with the aforementioned new upside targets. Hi, Steve. Thank you, Steve. My pleasure, Kedrick. Anything else? My pleasure, Alexander. You too. Thank you, Laura. Okay, so GE. Okay, let's have a look at GE and then we call it a day. Oh, this is ugly. Some type of a bullish consolidation. But look at it, it doesn't channel nicely. It's probably a rectangle. This is probably a rectangle here. There you go. Nothing to do as long as we remain within the boundaries of this rectangle, right? Chances favor a break higher. Look at the 200 daily moving average, also supporting for the time being. Support at 95.50, resistance at 115, roughly. The previous trend favors a break higher as a more likely possibility. with the implied upside target if that manifests being at 135. But currently in the middle of this range, so not risk reward is non-existent to be in long or short, right? So yeah, that's what I think about G. My pleasure, Alan. Okay, everybody, have a wonderful rest of the day, and I'll see you again tomorrow.